Access to capital is one of the most critical growth levers for a business. Let's find out from Lendefied CEO Devin Gambino just how businesses can think about credit and funding at different stages.
People bite off more than they can chew because they see opportunity to grow. But unless you have limitless money, you can't expect limitless opportunity. How you start and where you end up do correlate very much so in business. Entrepreneurs, we do this all the time, right? We go in, we ask questions, and we kind of take what we need to and we use it. And that's what makes us entrepreneurs. Learn from wherever it is that you are and take that with you to go. Treat it like college.
Good day to you all. Today's guest, Devin Gambino, is the CEO and founder of Lendefied. Thank you for joining us today, Devin.
Yes, Chelsey, thank you for having me. Appreciate it.
Yeah, before we dive into strategy and what folks should be thinking about, tell us a little bit about your journey and the launch of Lendefied.
Absolutely. I was in commercial real estate at a young age in Manhattan where you'd be able to walk down a street and there's billions of dollars of property on just, one small avenue. And there's a property at the doctor's office. And the doctor seems overwhelmed in his practice by even speak to the realtors that were walking through the space. And that's where this whole idea of, well, if I could figure out how to become an expert at what you need to be on paper to get as attractive in the market as you can be at the time of application. If I could teach people how to do that, then I could teach them how to become smarter with what type of product they take. And then to take it a step further, if I can stick with them after they take that product, then now I can create long-term growth. The issue was if lending is how I make money, keeping them coming back for lending. And that seemed like a bad cycle to me. So I came up with the concept of Lendefied having a product where a fractional CFO is included for 4 to 7 hours of time dedication with every funded business loan for the first 3 months. And at the fourth month, if you want to pay the $495 to keep your guy or gal, you certainly are more than welcome to. That's what we hope. 90% of our clients do stay with their representative that were assigned. But if you're a trucker getting a second truck or you're flipping houses and you don't necessarily need a CFO, that's fine too. That's the business. Is we don't want to be in the business of you needing to borrow money for us to thrive. We want you to be able to figure out how to become more financially savvy, become maybe even your own bank, if you will. And that's kind of how we got started and to where we're taking off to.
That's awesome. When you talk about thinking bigger, what does that mean in practical terms for an owner who's just like trying to keep the lights on right now?
Bigger pictures are dependent on how far back you can stand from the picture, right? If you are just opening up your business, you got to be in real close. You got to see everything that's going on because you got to know everything that's going on. As you start to grow, delegate, and you have to trust the people that you're delegating to. Because if you start to have to look away from one department to work over here a little bit more closely, you got to trust that this department's going to run as smoothly. What I have noticed is an example would be I have a woman that owns a hairdressing studio down south, and she's going to move to another space. The space is larger, and that was a charcuterie bar that she decided it would be a good idea to have her brother run that, and she could run the salon, and she got a lower rent price. But now she's realizing she's got to have 150 types of wine in order for her to have that license. Costs that she didn't consider because she's not in the restaurant industry. People bite off more than they can chew because they see opportunity to grow. But unless you have limitless money, you can't expect limitless opportunity, right? Opportunity is consistent with how much capital you have to invest in that opportunity. Now, there's one-offs where your idea is phenomenal or your product is changing the market. But for 80% of people, it's just really about not hiring 3 technicians when you first opened your used car, repair shop or your auto repair shop. You hire 2 techs and you put an extra lift in. Because having 1 tech standing around when you have 1 lift in the shop, but when you're buying the business, you're so excited and you've heard the turnover on techs is so high, it makes more sense to hire 3. It does. If you have enough money to spend on that tech, that's going to drop off. Otherwise, you'd save more money just paying them a little bit more for the 2 that you got. Now, like to answer your question, for a business owner that's in a bad spot or that is just trying to get by to cover their next payroll or 2 weeks from now gap in cash flow. Those are the business owners that I have tried so hard to reach before they got to that point, because there are products like Ramp by Visa, which is a phenomenal product. It offers you a percentage of what's in your bank on a line of credit with net 30 payment terms and 0% interest with those net 30 payment terms. So you think about a business owner, like I was just saying, with this charcuterie bar, she had to buy all that wine. Well, buying it on a net 30 for her is a game changer, because she's going to turn that wine over inside of the 30 days. It's now about buying it at the right time so she doesn't have it sitting before the stores open, but not buying it too late that she opens and it's not there. It's moving too quickly on too many things at once. And the second issue I find business owners do is they try and do something that they might not necessarily be the best at, but they are such an entrepreneurial mindset. They think I can get it done. I'm just gonna try and figure it out. Well, if you spend too much time trying to figure it out, now we're talking, right, the time factor of money and what your time is worth.
So for a business, I know in different stages of a business's life, they're going to have different needs or things they need to consider for getting funding and taking care of their finances. For baby company, someone who's under 3 years, what are some of the top considerations that you would recommend paying attention to?
If you were under 3 years in business and you currently are just using your credit cards, it's how you started, because think about it from a growth standpoint of you as a person. If you ate healthy your entire life when you were a kid and a teenager, you're probably gonna be a pretty healthy adult. If you ate bad your entire life, you might not be such a healthy adult, right? So how you start and where you end up do correlate very much so in business. And so I feel like if you have a business owner that started the business with all their personal credit cards, for example, now they're 2 years old, they don't have 2 years taxes fully filed yet because one's on extension or it's not a full year, whatever have you. Well, their credit cards are all tapped out. So now what? Now their personal FICO is 660 when it was a 720, but it's overextended. Now they're forced to work with subprime products, and those people are not going to tell you what I am right now, which is a little bit of a look behind the iron curtain, if you will. Let's say you do get approved for one of these shorter term 12-month products. They're never going to tell you to do this, but what if you were to take that product that doesn't show in your FICO as debt, right? And what if you were to move that debt from the FICO to the business now, use that money that doesn't show on the FICO and move it to the business? What would happen to the FICO? FICO goes up. Now you can go get a better product to pay off that subprime product and get away from that lender. There's always a way out, even if you're in a bad spot. But the person on the other end of the phone, if they care about the business, they're going to tell you, use this product to pay down those cards so you can get something better. But most people are not going to say that. They're going to say, use the money in your business to make money and pay off the cards on your own, knowing that they're probably not going to pay off the cards fast enough that when the time comes they need to borrow again, who are they going to have to go back to, right? That same person that they worked with, as opposed to in my circumstance, I'd rather they get a 0% intro business credit card and I'll show them how to liquidate it, because I'm here to help give them the financial guidance. And I think that's where people need to question. They need to ask the person on the other end of the phone, how do you make money? Is it because of the lending, or is it because of something else that you're doing for me with the lending? And if it's the lending and I'm here for you every time you need money, that's another red flag.
That raised questions like, I have personal cards that I get points on and things like this. And I'm like, should I even put like this podcast software? Should I get the airline points and keep it over there? Or do I put it on do I try to get a business credit card? Questions like that, if you have someone helping you along the way, makes it much less stressful.
Yes, and for anybody out there who's like, yeah, I use my personal cards because they give me points and cash back, and there is a reason that they do that. Is the big credit card companies, they do that because you're saying that right now, but go look at your tax bracket, right? If you can't write off the interest on a card for the personal side, but you can on the business, That's 21% in a corporate flat tax rate. So what's 2 to 3% cash back versus 21% in a corporate tax rate, right? There's a reason why corporate America is so happy that you have this opportunity to get this 2% cash back. It's not because they are so happy to give you money. It's because they'd rather give you 2% and put it in the market and make 10 or 6 annually. And we know that. But what we don't realize is there's millions of us. And when there's millions of us doing it at $50 each, that's multi-millions of dollars. And this is how corporate America has become able to become so powerful. We have to take that back by becoming more educated in how to finance these.
It's hidden in there. It's like when you see the arrow in the FedEx logo for the first time. Have you ever look at the FedEx logo and once you see the arrow, it's like, oh, it's there.
You can't
Lendefied.
unsee it. Right.
What are some of the mental blocks that you see happening in these early stage companies that might be getting in the way of doing these best practices with their funding?
I think people become so excited to do what they love to do because when you're opening a business, you're not doing it. Very rarely do people open a business because it's going to make them a lot of money. Kevin O'Leary from Shark Tank does that. But most average Joes are just opening a business because it's going to support their families. They know the trade or craft and they don't hate it. Something that they don't mind doing. Right. And so, like girl on Long Island that does home plumbing services told me once, he said, Devin, you think I like being a plumber? He said, I'd rather do this than road work. And these are the things I know how to do. I said, that's actually kind of fair. He said, but if I open a plumbing business, now I know how to be a plumber, but I don't have to plumb anymore. I don't have to actually do the work of a plumber anymore. Now I'm just dispatching calls and I'm working from my desk. It takes so long sometimes to work in an industry to feel confident that you could do it on your own, right? If more people were able to, I would say commit to themselves as being entrepreneurial mindset or a W-2 mindset from the time they step into whatever field they choose, that will help people a lot that might be listening to this that don't have a business yet, that are just on the verge of getting it going. Stay in the industry you're in. I was in this industry of lending for 10 years. If you go to my LinkedIn and see where I was prior to here, it was 10 years. And that company had 7 employees. Now they have thousands. So I watched a company that does something similar to what I'm doing, do it. And I saw them do it to scale. And then I did it on my own. Watch somebody else's mistakes and let them waste their money and watch from close up, right? Keep your friends closer and your enemies closer. Well, if it's a future enemy and you know it's a future enemy and they don't know you're a future enemy because you're an employee at that point, right? Now you have the upper hand, right? For probably one of the very few times that you will as a small business owner. Right? Being able to work for a company that's corporate America, it's millions of dollars, and see how it is they work. What banks do they work with? How do they market? Where do they get their data from? Learn from wherever it is that you are and take that with you to go. Treat it like college.
Betting on yourself and taking a leap from, hey, I'm really good at this thing, or I love this thing, and I can start a business does seem to get in the way sometimes with the mind stuff.
What happens is if you're not thinking about it while you're there, you're not going to learn everything that you need to, right? Like when I was working where I was at, I would ask questions like, where are you getting your data from that you're then marketing to? Like, where do you get aged data, it's called, right? People that have applied a year ago, but, maybe didn't get approved or whatever it is. Where are you getting that data? So like ask the questions that at your level of employment, it might not be important, but when you think about it, you're going to open this kind of business, what are the things you're going to need to know? You start thinking like that. Think of how many moves ahead in this chessboard of life.
That's a great point. I love learning. I'm very curious to an annoying point to some people, but if you're not a curious person, just ask why or how a few extra times and people will train you, teach you
Yes.
what they know. So if
Or
you're
give it your best shot and fail, but show them that you tried your best. And even if you didn't do it well, people will still usually try to show you.
for sure. Now, say you've been around for 3, 5 years. What are some of the different shifts that a business owner needs to start thinking about at that stage?
They're not off the hook, right? That's for sure. If a business owner is 3 years old, 4 years old, 5 years old, just because you have 2 years of tax returns and your credits now maybe in the 700s because you don't use the business anymore because it did finance itself at this point. It doesn't mean that you still don't have to go and make sure that the things you should have done when you were 2 years old, because a lot of the times the things you should have done when you were 2 years old were not all done, right? Because you were 2 years old, you had a lot going on. Like getting an Experian BIN number. Right? If you go on Google and look up what is an Experian BIN number, I'm actually going to roll over the whiteboard here and I'm going to write up something here as I'm talking. So if you're listening, trust me, you still want to go to YouTube, you still want to go check out what it is that I'm putting on the board here, but you'll be able to hear it just the same. But I kind of want to make a point here that is more visual, but also can be auditory if you're following along. You have a FICO score, right? And then you have business credit. And a FICO score is 30%, right? If you were to have a pie chart, 30% of the score, 35% payment history. Payment history, how often you make payments on time. 30% of the score, though, is how much of the credit card debt are you using? It's debt to income ratio, right? We all know what that's like. You use one of your credit cards, and now all of a sudden the score goes down, right? So if 30% of a test was going to be on Alaska and geography, you'd study a lot about Alaska, but people don't think about this when they're swiping their cards, thinking I'm going to need to, borrow in 6 months or a year on my business. This is going to affect me. It does. Business credit isn't affected by debt to income or inquiries, for that matter. It's just payment history. How many trades do you have? The types of trades, and how high are the limits of those trades? How frequently are you paying them? Right? Is it once a month? Is it every 60-day net terms? That kind of thing. So when it's not affecting debt to income or inquiries, why not use that to shop? Why not have that be the place we store our debt? Because most people don't get given an EIN number from their dad, who was in the accounting business for 40 years and said, "Here, son, I'm going to give you my business, and I set up this trust for you. It's got an EIN number. It's all set." That happens sometimes, not as often as you think. And then you have, obviously, from a taxable perspective, right? If you're not doing the contracts after you use a personal card, you're really not able to pay yourself back legally without having to be taxed on the money that you're paying yourself because it's income. But if you loaned yourself money, you're being paid back. Now you're not being taxed on that income, just on the interest that you're getting, right? So just benefits of doing it the right way will benefit you on paper as well in the long run. It doesn't always mean more taxes, as long as you're paying interest on some type of loan, like an SBA loan. It's a wash.
If you're in a mad dash year 1, year 2, you're buying the wine, you're like, let's redesign the booths so this charcuterie place looks fucking awesome. And you're just doing it. You're in it, you're living, you're growing. But after 2 years or 3 years, you can go back and fill in the gaps and still kind of fix things if you missed them like this.
You certainly can. An Experian BIN number, BIN, is something you can get at any time. DUNS number is something you can get at any time, a Dun & Bradstreet number. And a lot of these places are going to say, oh, you could sign up for this monthly product or service. You don't need to. Just get the number, right? And then when you have the number, go to companies like Uline, Granger, right? These big name companies that will give you net 30 terms. I know you don't need paper and clips from officesupplies.com or whatever it is, but if they'll give you net terms and report to the bureaus, get these numbers, buy the paper clips, you're buying them anyway, and have the payments report. Now, nav.com is not a company that I'm affiliated with. Don't get paid for sending them clients. They do offer the ability to see what your SBSS score is, which minimum SBSS scores for the SBA vary bank to bank, but the minimum E-Tran score for the SBA just went up June 1st. It's now 155. An E-Tran score is a combination of business and personal credit. So if you don't have business credit, you're going to need a very high FICO to qualify for the SBA, which is why everyone thinks SBAs are so hard to get, because they don't have these things on the business. So then the SBA goes, okay, well, is your FICO at 800 or 750? Or no, it's not, then you can't help. But I have friends now with a 640 or a 660 credit score that are able to be eligible for SBA 7A loans because they are doing everything on the business that they need to do. So their E-Tran are above that minimum qualifying.
Just another reason why having somebody who knows what they're doing help you is is so great. It makes a huge difference. If you've built your business, you're ready to sell it. You're ready to close up shop or sell it. Well, you're not closing up shop. You're ready to be acquired. What are some of the things you should have done all this time to set you up for success, or you need to be thinking about in these final years?
I think that's a great question. As far as the type of products that you could use, a lot of people think, well, retirement for me is selling my business, or retirement for me is selling my house, especially business owners. So pensions, right? Unless you've got one for yourself. But there is something called an infinite banking concept. And what this is when you have a wholly paid life insurance policy, let's say the value of the policy is $45,000 a year that you're putting in. By year 4, you got $180,000 in here. But remember, they were going to pay you about 6 and some change to keep that money in there. So with compounding over the 4 years, you're more like 210 to 220, right? So think about that. Now you're thinking to yourself, yeah, but this guy's, not going to be planning to pass away. How can he use this money? How does this help? Well, what if I told you that now this value, this $200,000 value, is able to be borrowed against, but the account still builds value at 6.25 as if he never took any dollars out? Why? How is that possible? Well, he never took any money out. He borrowed against it. Now, when he borrowed against it, and this continues to build at 6.25, what's the rate he paid to borrow? Less than that. So it's a wash against the market gains. That's one. Yeah, but he's got to pay tax on that money. He took it out, just like a K or a pension. Did he take it out, though? Or did he loan against it? A loan is not income. So you just also saved yourself tax money having to be paid. Now, people say, well, you're putting personal tax. That's illegal. Well, if you've done the right thing along the way and told the story on paper the way that it is, which is 90% of Americans use their own money to start their business. And then a lot of payrolls come and you got to go to your personal bank account to cover that payroll. Happens all the time. But business owners are so busy. What don't they do? They go home, they be with their family and their wife and their kids. They eat dinner and they want to spend time with their wife and watch X Factor or whatever it is on TV. And then all of a sudden I forgot. And now they don't do whatever it is that they were supposed to do. They don't go report to, they make the payment that day or whatever it is that they forget to do, right? There's so many things going on. But, if this is an example where they can imagine somebody borrows against this for $180,000 and pays off their mortgage. Now, where are your mortgage payments going? To who? You.
Your retirement. Your trip to Paris.
You just became your own bank, right? No, because now you're making monthly payments back to your fund that you'll be able to borrow against if you need to. And it looks like on your FICO that there is no debt because there isn't any. And again, the market gains wash it anyway. So having this type of product, people look to get this in their 60s. And here's the problem. It's wholly paid life insurance. So you have to qualify and be healthy enough to qualify. People in their 30s, their 40s, that's the age you want to get this. And what have I been saying this whole time? People are not as proactive as they should be. They're way more reactive, especially for some reason after COVID. Everyone seems like it's a little bit more reactive right now, and we're in a reactive economy. But that doesn't mean that you have to be a reactive business owner and match the economy cycle.
What are some smart ways, no matter the stage of business you're in, that you've seen clients leverage this capital to fuel faster, smarter growth?
I haven't seen this type of success in the market, uh, I would say the last 6 months. I have not seen a successful market shift as I have the last 6 months since probably 2005, 2006, 2007, when there was a little micro, drop in 2007, 2006. When that real estate world was getting 95%, 90% loan to value, that was a great time to be in that industry. Right now, it is so easy to obtain money, right? If you think about it, an SBA EIDL loan was eligible to pretty much anybody in 2020. So many listeners right now probably have one. It's a 30-year, 3% SBA loan. You could have literally got that anywhere in the country and not even really been using your entity, just had it and said that it was affected by COVID. Could have got it. And so now there's still this influx of money in the market that our government, right, is guaranteed on those SBA loans. As those funds get recouped, that is going to help rates drop. There is a direct correlation to how much money the SBA is guaranteed and how much they expect those returns to be on an annual basis, being that the amortization is front loaded for these SBA IDL loans. So it makes more sense for the market rates to be higher for new loans while they collect for these low rates at 3%, which are technically a little bit more because it's front loaded, right? So if you take into account all this information, you start to see there's a J curve coming. The economy is going to do a dramatic shift upward. And I don't want to say it's administratively because it's not. It's not a political statement. I'm saying that the timing of the way that everything's happened would have happened, I think, as long as the money was put the way that it was, wouldn't matter who was in office, as long as these dollars were put in these directions, this J curve would have happened. It's the effect of having more money out there in the market, but not more people borrowing. There's more people paying back EIDL loans now than that are applying for them, which is the first time since 2023.
So, how do you help business owners go from short term survival, figuring out how they should be doing things, to long term wealth building with their businesses?
I think there's a trend right now where people are feeling like they need to have this exorbitant amount of knowledge or capital before pulling the trigger on something. And I talk about being reactive versus proactive. And people might hear what I just said and think, well, that's very reactive. I want to learn my craft. I want to figure out what I'm doing before I pull the trigger. I'm not talking about starting your business. I'm not talking about making a hire. I'm talking about the way your website's designed, right? You can tweak that over time. Get the website online. You spending 6 months tweaking the website, making it a little bit different here, a little bit different there. It's as important as the SEO and getting the domain reputation and everything started and getting all that going. That comes first. But people don't always have the most education in their space. They spend time trying to get educated. Go hop on a podcast, right? Or find somebody like what Lendefied does. My company is a C-suite service. So there's CMOs here, CTOs, CSOs, and CFOs. It happens to be that when you do lending, most people want to talk to a CFO because they're talking about money. But after the lending's done, it usually month 4 or 5 after they've gotten funding, people usually ask, Devin, what else can you guys help me with? And that's when they'll start to realize, God, you do marketing and there's all these other services. Executive on my team worked at an enterprise level firm that makes at least $1 million in annual revenue. So we know how to point you in the right direction. And if you could find firms like ours in your local area, even that you could walk into, it might be a financial advisory type of firm. It's not a bad idea. Even if you go in there and just take their ideas, entrepreneurs, we do this all the time, right? We go in, we ask questions, and we kind of take what we need to and we use it. And that's what makes us entrepreneurs. Don't be afraid to go to a financial advisor with Wells Advisors and ask them questions, knowing that you're probably not going to put a single dollar into a Wells account. You just want the knowledge. It's not something to be ashamed of or feel like it's a waste of time.
So, you don't need to be, say, you're the plumber, you're the expert at the plumbing and running a plumbing business, like how to manage that all. You don't also have to be an expert at marketing, an expert at sales, an expert at finances. You can find help so that you can get started sooner.
Yeah, and people are going to say, well, Devin, that's easier said than done. Who's going to help me at no cost? The idea is that you need to find a company that is what they do. Well, there's so many companies out there that are scams. Goes back to the red flags, right? A company that is going to not charge you until there's a benefit, until there's something, until it's finished. I've had clients tell me, Devin, I'm not going to pay you until I can see the website is functional and that the calendar booking feature is working and I have my CRM set up. Well, guess what? I also made sure that that was done expeditiously because I wanted to make sure that if you're going to commit to that right now, I'm going to do all this work and you're going to make sure that you come through and pay. I'm not going to wait a week to do the work and then call you up and say, hey, please give me, remember, say you said you'd pay me, remember a week ago? Because what I found is people are very forgetful at times. And so it makes more sense to just, no problem. You don't want to pay me before the job starts? No problem. I'll get started right now. What I'd like to know is I need your full undivided attention. So that way, if I need something, I'm not waiting 2 hours for it from you because you're now top priority because you're not going to pay me until this is done. And now I can't get anything done for you until you pay me. So it's a catch-22. Now I get this done as soon as possible, but as soon as it's done, I'm going to pass the reins to you as opposed to pay me, then I can build it, and then I will show you how it works. If you make me build it first, what I do with people is I say, no problem, I'll build it first. You're going to get it done like that, but I'm going to give you videos that show you how to use it. So the time I saved, right, you are still going to have to put in because what I found is people are very like, oh, I don't know how to do it. Could you do it? And I'm like, sure. But now that it's done, here's a video that shows you how to work everything. People are like, oh, Devin, I thought you'd do it for me. I would if you gave me a week's notice. But now that I've had 12 hours notice, here's how it works. And I made it. Right. So there's like always give and take. And if a business owner is like, well, I thought you were my CFO or my CMO, it's like, well, I'm here for 4 to 7 hours a month. That's the give. Right. And then the take is you're going to have to do a lot of the stuff maybe on your own, but you're not going to have to learn how to do it. I will show you how to do it and do most of the legwork, but I can't have a power of attorney signed that now I'm filing your tax return for you. Like that's the level too far that I can't go to. Where if you bring a CFO on board, they can. And we'll tell you when you're ready for that. We're not going to hold you back because when you are ready for that, it's a responsibility we don't want anyway.
All right. So we are about to wrap up on time, but if you were to leave, if someone listening to this was to take a few or one nugget away, what would you hope that they took away from the expertise you've shared today?
I would say there are plenty of things that your accountants care about. One of them is not that you are profitable enough to qualify for lending. If you do not make your accountant aware of what type of lending you may want in the upcoming tax year, it makes it very hard for them to strategically file their returns the way they need to. So be more open with your CPAs, your CFOs, your accountants than you maybe are right now. Because if you say, I'm looking to borrow money next year, I'd like to do an SBA loan. Well, guess what? If you Google minimum DSCR for SBA, it'll tell you what the number needs to be. Give that number to your accountant. He can file, make sure that your cash flow passes for that number. And now it's on you to make sure your SBSS scores, right, on NAV or wherever you're checking is above that 155 minimum we discussed. And now you've just pretty much green-lighted yourself before you even stepped in the door.
So become a little bit more proactive. And you've given us the tips, just like check these few things, guys. I'm going to be checking those few things. So I appreciate you coming on here and, sharing your wealth of knowledge. We're going to link to Lendefied and to your personal LinkedIn below so that folks can find you. And yeah, we hope to keep learning from you and watch where your company goes.
I appreciate that. Thank you so much to you and all the listeners. Appreciate you.